Thank you, Peter. Just a few months ago, the experts were telling us the time to consider fixing your mortgage had arrived. Now they've changed their tune with even lower rates now a possibility. But if you took that advice and fixed too soon, should you consider breaking that contract? Well, with us now is Gareth Vaughan from interest.co.nz. Good morning to you, Gareth.
Good morning.
Well, the experts are changing their tune, aren't they? Why is that?
Well, basically, last week we had, obviously, the Reserve Bank come out with its latest review of the official cash rate, and there was a hint in there this time around that the next move could actually be down, whereas in recent months everyone's been assuming it would be up. So that's changed, and last week we saw the wholesale rates or the swap rates that banks use to fund their own funding costs, we saw them fall. So there's a very real possibility now that fixed-term mortgage rates may be coming down.
So if you're hearing that and thinking, why did I a few months ago take that advice and fix my mortgage, is there anything you can do about it?
There is. I mean, you can look to break your fixed mortgage contract, but that can be an expensive process. Now, there's a good paper on this on the Banking Ombudsman's website that explains the ins and outs of break fees. Basically, in a falling interest rate environment, which we may be heading into now, which is a surprise to a lot of people, but not everyone, that can be an expensive process because the idea is that the bank can cover its costs, the lender can cover its costs. So if you are thinking about breaking your fixed-term mortgage, you really need to get your calculator out, talk to your bank, have a look at the Banking Ombudsman's paper, and just work out, factor in the costs of breaking that mortgage to your overall costs of the lower rate you might be able to get.
So if break fees are so expensive, potentially the interest rate, the better interest rate you can get would have to be quite a bit better to make it worth it.
In all likelihood it would be, but I mean there are some pretty good ones around. We saw last week Kiwibank come out with a 4.99% one-year fixed rate special. The floating rates now are around sort of 5.65%, 5.75%. So I mean that does sound a lot better, but also I think another thing to keep in mind is that you don't have to fix all of it or float all of it. You can fix a portion of it and float a portion of it. You could fix a portion of it for 2 years and another portion for 5 years and float the rest. So there are various options. And also, if you look at those advertised rates from the banks, you can usually do better if you haggle with them a bit.
Do a bit of negotiation. Yeah. You mentioned that fixed rates might come down further. Would it be much of a fall?
Probably not. Probably a few basis points. I'd be surprised if it was a lot at this point.
And we all used to be big fans of fixed rates. Do you think we'd see a flood back to fixed rates once they do start going up?
It's hard to say. I mean, at the moment we've got historical highs. We've got 62% by value of all rates, all people on mortgage rates are floating by value, and that's the highest since the Reserve Bank started measuring the fixed v floating divide in 1998, and we've got 85% that are either floating or fixed for less than a year. So I think it would really have to be a much better deal to fix for people to really start switching in large numbers.
Thank you very much, Gareth. That is Gareth Vaughan from interest.co.nz.